This tutorial will be mainly on drawdown calculation. So on our two products, Turbo Robot Profit Maximizer 2.0 and Trend Multiplier Robot tutorials. Alright. So what you will learn on this topic, first is targeting monthly profit and strategy, lots calculation, drawdown, and your losing trade. So your third one, total lot size to use and level of martingale, understanding on this level. And then by the end of this training, you should be able to know your drawdown percentage after this training video. First is basic calculation and capital allocation. So our target profit here will be 8 to 15% monthly. So based on your capital and also your settings. We need to know first our base, the best currency pair to choose. So we have reminders here. Please choose the currency pair with loose spread, ranging, and with volatility, right? So most of this currency pair that we are using and tested will be Euro US dollar, USD Japan yen, so USD GPY, Australia USD, and Euro GPY, USD CHF, and USD Canada. So reminder to avoid GDP USD. It's because GDP USD is a very risky currency. Because it rains more than 250 pips sometimes in a month without reverse. So that currency pair is a quite dangerous, and we are not encouraged that to use this in our EA. All right. So first, our starting capital is about 100 USD. If you are trader with this capital, so this belongs to you, and 200 capital. So 100 and 200 for those trader which is new in this industry. So you should start in this level. For those novice and all that. So you have a calculation, drawdown, and losing trade. So your 100 US dollar capital, make sure to use cents account. So cents account, the reason why cents account, because you can set more than high levels. All right. So here we can set up until 10 levels or 11 levels of martingale, because if you use 100 US dollar with standard account, definitely just one or two open trades will be gone. All right, because this is martingale. So make sure you know what is your risk. Don't use standard account if your capital below 5,000 US dollar. All right, so make sure to use cents account with these types of capital. So here we will be show to you the martingale level set. So you have your level 1, level 2, level 3, level 4, level 5, level 6, level 7, level 8 until 11. So I pretty believe that you go through in my previous training. So it was explained this level and also this lot size and all that, and your lot started. Okay, so this is the total here. If you calculate this, so what it means by here, a note over here is settings on every next trade will be 20 pips and a TP is 25 pips. So I will explain this. So let's say this is your level here. All right. So remember that you have levels. This is the one, this portion over here. And this level will be start like this. So let's say this is 20 pips, right? So 20 pips when the market going up like this. So this is equivalent to 20 pips. This is your X1, trade 1, and this is your X2. So this is the one, right? So the next trade of our EA will start with 0.01. And next start with 0.01 again. You know why? The reason is because we want to save more lot size over here. I mean, we want to save more levels. You can go up to 220 pips if you're setting up with 20 pips. So this is just 20 pips, and let's say the moment is still going up, it doesn't reverse back, so it's still 20 pips. So total of 11, you multiply with 20 pips is equivalent to 220 pips over here. All right. So it means 220 pips. What it means by that, let's say from here down to here is equivalent to 220 pips. So that's a lot. And then alright, 220 pips without reverse. So that's why I put it here, 220 pips sudden drop. This is the worst case without reverse. Sometimes the market that you choose the currency, maybe you choose like USD JPY, it doesn't reverse at all, and it will just go ranging like that, then after that go up and go up, it doesn't reverse back, and at 220 pips in just but remember that in Forex it will always have a drop later on. Alright, so 220 pips is very high in normal day trading. It is very high. So this is the 25 pips over here. So where is this 25 pips? So let's say the moment it going up here, this is one, so your 25 pips will be here. What it means by that? So from x1 and x2, your x2 will open up, then you have a TP here. TP, remember your TP is 25 pips. So 20, then added 5, it's equivalent to 20 pips drop. So let's say the market go back to 25 pips. So you will be earning both. This one will earn and also this one will earn. Alright. So if the market doesn't reverse back, so this is the thing. But if let's say it will reverse back, the 25 pips will be here. So this one will change and all this will change. So if let's say the market or your hits, all the trading hits about 1, 2, 3, 4, 5. So 5 levels and your TP will be here, right? So if the market reverse back here, 25 pips, all this will close all. So I did explain this on our previous training video. So this one you should know more on this. So this is your drawdown calculation. So let's say your 100 US dollar capital and 200 US dollar capital for those starting traders. Alright, okay, let's say. So just imagine that you are losing, just now explanation is you are losing about 11 levels of martingale, which means 220 pips down. Okay, so your 100 capital is equivalent to cents account of 10,000 US dollar in the cents account. So make sure, remember that use cents account instead of standard account. So here we are using 2 pairs. So this is a bit risky, but depends on your pairs that you use. Okay, so remember that here in our previous episode, the lot size to the total use of 220 pips is about 10.24. So this is why we have 10.24 multiplied by 2 pairs is equivalent to 20.48 US dollar floating losses that you have in your trading. So it's not closed up yet, your account. So after drop down to 220 pips, it doesn't close. It is just a floating losses. Alright. So what is your drawdown percentage if the pairs hits 11 levels without and your EA will stop that because you already set it at 11 levels. Alright. So your 20.48 we divide it by your capital and multiply by 100 is equivalent to 20.48%. So this is your maximum drawdown if you drop drop on the market with until 11 levels. So it's not so dangerous. It's because you still have 200 you still have 20.48%. So you still left about 89 point something percentage to play in the market. So this is why floating losses is because we are waiting to reverse it back and hits our TP. Alright. So for 200 US dollar capital, this is over here. So it's equivalent to 20,000 cents account. So here we are suggesting to use 3 pairs. All right. So 3 pairs is because we wanted to compensate some profits. Let's say if one pair is not performing well on that particular month, so we can compensate some profits from different pairs. All right. So that's the purpose of multiplication on your leveraging on your pairs, currency pairs. All right. So 3 pairs. So remember, this one is at 10.24. Remember here you have the total lot size used if we reach about 220 pips. So lot size multiply by 3 pairs over here, so equivalent to 30.72 US dollar floating losses. So if your 30.72 US dollar floating losses is over here, you divide it with your capital and multiply by 100%. So this is your 15.36% here. So 15.36% is not so dangerous. But anyhow, if let's say your trading goes wrong, you can top up your capital while waiting to hit back your TP, because definitely on 220 pips high, the moment that the market reach that level, definitely there is a reverse back. Confirm, yes. So we have a conclusion here. If your capital is still your capital is still very safe at all, even all the 2 to 3 pairs are max level to set 11 level floating losses. So what it means by that, which let's say all these 3 pairs over here hits up to every pairs. Let's say you use Australia US dollar, another one is USD Canada, another one is USD Japan yen. All of these pair never hit your TP, and I don't think so it will be happen, but it will happen possible, but this is the worst case. So all of these 3 pairs hits up to 220 pips drop or high without hitting your TP. So it's still safe, because you're still losing or floating losses with about 15.36%, and you still have about 70% plus, 74 above, tradable and in the market. All right. Next is for your, if your capital is 500 US dollar and 1000 US dollar capital, your lot calculation and drawdown losing trade using cents account. So remember, we are using cents account here, right? Okay, so a few reminders. So this is 500 US dollar capital with 50,000 cents account if you convert it to cents account. So make sure you use your cent account. So it's the same thing. Martingale is under 11 level, and then started lot size here we are using still 0.01, and for here we are using 0.02 for 1,000 US dollar, equivalent to 100,000 cents account. So if you are using 1,000, you are starting lot size, we increase the lot size to 0.01. So the reason why here, why is still 500, why you are on 500 but you're still using 0.01 lot on your cents account. So the reason why is because we are leveraging more pairs later on. So you can see over here is our equivalent to 6 pairs already. All right. So it's the same thing. The settings will be 20 pips and 25 pips. So I think you understand this already. Just now we have done explanation. So total still on 20 pips on the sudden drop, worst case without reverse. So this is the calculation drawdown. So losses once hit 11 level martingale. So your 500 US dollar capital with 50,000 cents account. So now we are using 6 pairs. If you are using 500 US dollar capital, we try to use about 6 pairs. How much is our drawdown here? So remember that our total lot size used if you hit 11 level will be here. here 20.24. So 20.24 multiplied by your number of pairs, so 6 pairs, so equivalent to 61.44 US dollar floating losses. If you are minusing it, so this is the calculation. Maximum drawdown percentage will be 61.44 US dollar. You divide it with your capital, is equivalent to 500 US dollar here. So times 100 is equivalent to 12%. So 12.288% maximum drawdown. If your all 6 pairs will hit 11 levels, all never touch your TP. So I don't think that one will happen, but if let's say that's the worst case, that all your total 6 pairs will hit up to 11 levels, which means 6 pairs all is good drop to 220 pips without reverse and without hitting your TP. So but still your account still alive because you're still on 12.2%. So it is still manageable. All right. So we will look at on 1,000 US dollar capital account. So again, it's a 50,000. It's 100 cents account. All right. So let's say you are on 6 pairs. Okay. All right. So remember that we are using here 20.48. So 20.48, you multiply it with 6 pairs is equivalent to 122.88 US dollar floating losses. So your 122.88 US dollar, you divide it by your capital and multiply by 100 is equivalent to 12.288 percentage. So it's the same. So your 1,000, and because your lot size here you started with higher, and it goes to higher. All right. So remember this one and this one is the total lot size on your cents account will be 20,000.48 lot size, 20.48 lot you're using. All right. So your drawdown, maximum drawdown of all these 6 pairs will drop to 220 pips without reverse. So this is still equivalent to 12.288 percentage of your capital has been profit. I mean floating losses. So we are waiting for reverse at this moment. If all these 6 pairs will be dropped to this 11 level, and your EA will not perform anymore because you are on 11 level settings. All right. So while waiting for that, definitely the market will reverse later on. If let's say it is a sudden high, definitely it is reverse back. All right. So if you are familiar with that particular pair that you use up or you're using, so make sure that you use the particular pair. You have to calculate your their monthly ranging. So that's why if you calculate that, so you will know that how big is possible that you will be hitting. All right, on your floating losses. All right. So definitely it will reverse back. Okay. So the conclusion here is your capital still safe even all the 6 pairs are on maximum level at settings at 11 level floating losses. All right. And let's say you are on scenario of definitely it doesn't reverse back and it still continue ups or still continue down, and then it's not hitting your TP anymore, and you wanted to save your account. So my suggestion is you have to top up your account. Okay, if let's say you are on 500 or 1,000 and it looks like it doesn't reverse back all the 6 pairs, so top up it maybe just about 50% or so for you to save your account. So don't do any trades anymore. Just wait it for reverse back. All right. So definitely on the market it will reverse back maybe in the next few days and hit back all your TP again, and after hit your TP and it will be open up new trades. All right. So that is how the way this EA and works. So next is our if your capital is 2k USD and 500 USD. Is how much is your calculation drawdown. So it's the same thing. So you use your capital here must use cents account. So cents account is because we wanted to level up more, and your lot size here will be growing up. So remember that the previous less budget or less capital accounts will start with 0.01, but if you're higher, you're still using your cents account. Don't use standard account here. It's because it's, you won't survive on how many layers. All right. So for 2k USD, you will be starting with 0.03 lot size. So if you are martingale it, so double up, keep double up. So the total lot size to use is 30.72. While your 5k USD capital, so we will suggest to start it with 0.05. Okay, so 0.05 lot, it will the moment it will double up, then double up. So remember that why this one is keep repeating is because we wanted to save more levels here. That's why we want to use the same lot size over here. So this is the one, these two. The first two level of your EA will always use the same lot size because we wanted to level up more levels that will be hit. Okay, so if let's say this is until 11, it will be total 51.2 cents lots account. Okay, so it's the same thing. The settings will be 20 pips and 25 pips. So means same thing, 220 pips if there is a sudden drop, in the worst case, and reverse. All right. So how much is your total calculation on 2k and 5k US dollar? So here's the 2k and 5k US dollar capital drawdown calculation. So floating losses hits at the 11 level martingale. So it's the same explanation just now. So if your 2k capital, you'll be on a 2000 cents account. So make sure you use the cents account. So we have 6 pairs over here. So we're still using 6 pairs, and then your total lot size here will be 30.72 multiplied by your 6 pairs. So means you are losing floating losses about 184.32 US dollar floating losses. So there is one. So we divide it with your total capital multiplied by 100%. 100 will be 9.2% floating losses. So maximum drawdown for 2000 US dollar with 6 pairs and started with 0.03 lot in your cents account. So still on 9.22 floating losses. Okay, let's say you are on 5,000 capital and you started with 0.05. So it's still 6 pairs, but we are increasing our lot size, the starting value, lot start. So 51.2, you multiply it with 6 pairs, is equivalent to 307.2 USD floating losses. So this is just your floating losses. You multiply, you divide it with your capital here is 5k. Multiply by 100 is equivalent to 6.144% floating losses. So I pretty believe that this is a very worst case that 6 pairs will drop to 220. So your account is still manageable and still doing well while waiting for the reverse back of your capital. All right, I mean reverse back of the market. Okay, so the conclusion here is your capital will still very safe at all, and even though the 6 pairs are the maximum level at 11 level floating losses. All right, so now we touch on 6,000 or 6,000 US dollar capital and 10,000 US dollar capital. So if you are big investor, maybe your capital is more than this, and you can see this capital is 6k and 10k. I think your capital is more than that, so this is your for the big investors. All right, so the same thing, your level, and then your lot started will be started of your 6k will be, we will try to calculate it with 0.06. Actually, all this calculation you can do by yourself, but this is just for you to see in how we can calculate your possible risk if your drawdown will be dropped like that. All right, so it's the same thing, 20 pips with 25 pips TP, and then 220 pips sudden drop. All right, so drawdown calculation, your 6k capital, we still use cents account, but we are the reason why, because cents account will be, which means you are on 60,000 600,000 yeah, capital, cents account 600,000. all right, so your pairs will be still on 6 pairs, but we did increase on our lot started. So to get your you're pursuing that you are getting 8 to 15% per month. So this is your 6 pairs. So if you multiply that with 6 pairs, so total is 61.44 lot size. So since lots, okay, so multiply with the 6 pairs, so equivalent to 368.64 US dollar floating losses. All right, so 368.64 US dollar, you divided with 6,000 capital, same, is equivalent to 6.144% floating losses. This is not, remember that floating losses is not yet a loss, it's still on in stocks we call it a paper loss. all right, so it's still safe even your 6 pairs drop. all right, so if you go through with your 10k capital here, so we are still using 10k cents account, so you can use with 6 pairs, but your lot size will be started from 0.01. okay, 0.1, sorry, this is a 0.1 lot start. okay, so your total 0.1, if you hit the level of 11, you can make it like total will be 102.4 total lot size use if it hits to 11 level. All right, for the 6 pairs we multiply it by 6 pairs, so 614.4 US dollar probably is your floating losses on 6 pairs. So let's say you are on 6, this is your floating losses, you divide it by 10k capital, so multiply by 100 is equivalent to 6.144, still still very safe. So 6.144 floating losses while waiting to reverse back to the market. all right, so your capital is still very safe, even all the 6 pairs are on maximum level at settings at 11 level floating losses. all right, so all this calculation here is just an example. It still depends on your capital, and I hope you understand what I mean over here. So if your capital is more than this, you can increase your lot size, or you can use your standard account but less pairs. So if your capital is below 1k, so you still can use this 6 pairs, but make sure to use standard cents account. all right, and so I pretty believe that you understand already all these calculations, and floating losses will be how much and all that. So this is just an illustration. If you have a better calculation for yourself, so yeah, you can apply it. okay, this is just to guide you on how is the calculation and how much is your drawdown. all right, and if you have inquiry regarding this topic and about the AA and all that, so please let us know by sending us an email at admin@forexpipsplus.com. so thank you for watching and thank you for listening. all right, thanks.